So in the last two videos, we've been talking about beginner investment strategies. First, we talked about just dollar cost averaging into index funds. And then in the second video, we talked about a 50-50 split between index funds and buying single stocks of companies that you know slash love. And I would start to say that we're now getting into more intermediate slash advanced investment strategies. And now we could look at what other sources could we look at that could diversify us outside of just equities in the stock market. There's things like commodities like gold, oil, silver, precious metals. You could also buy bonds. I wouldn't recommend bonds unless you're a lot older and you need a fixed return because bonds typically well underperform stocks. So you're better off just putting most of your money in stocks. But you could buy bonds as well. And then if you're crazy and or risk oriented, but I wouldn't recommend it, not at the beginning at least, maybe get a base of $50 to $100,000 in index funds first before you start buying things like options, futures, crypto, even too. I'm a big fan of crypto, but I would not recommend it for somebody early in their investing journey. That's something that you start to, once you get to a point where you have more money that you're willing to lose, because especially if you start getting into altcoins, the chances of you losing your money are pretty high. So I wouldn't put a ton of money into that. Bitcoin, I would argue, is a little safer, but still not. I'm aware it's not the most safe. I got lucky buying it at the right time and it gave me a great return. But part of that was luck and part of that was just sunk cost fallacy and unwillingness to sell despite having had at a certain point massive losses. But you could diversify into that as well. And that would definitely give you a bigger range of exposure to different investment vehicles. That could potentially give you better returns but could also give you worse returns. So that's something to keep in mind. Warren Buffett always said the first rule of investing is don't lose money. The second rule of investing is don't forget rule number one. So buy quality companies, buy them at a great price, ideally. And if you need help buying them at a great price, just look at moving averages. Look at the 200-day moving average, look at the 400-day moving average. Buy closer to that or below those points for companies that you already love, and you'll be straight. So if you have any questions, leave them in the comments. I'm willing to answer and help anybody with any questions that they may have. I love talking about this stuff, which is why I do these YouTube content in the first place. I haven't made $1 from this, but I love talking about it anyway. So I started making the videos. So let me know if you have questions. All right. Good luck out there.